Hello and welcome to this very, very special interview here on Money Paathshaala. Joining me today is one of the tallest leaders of the Indian mutual fund industry, someone who I've been privileged to know for over 2.5 decades now, and someone who's built ICICI Prudential Asset Management Company, which just completed 25 years. Thank you very much, Nimesh Shah, who's the managing director and CEO. Before the mutual fund industry, he's been part of the banking industry as well. So, someone who I've always looked up to. Thanks, Nimesh. It's always a pleasure talking to you.
Same here, same here.
At the outset, you've just completed 25 years. Heartiest congratulations. And my
Thank
first
you.
question, therefore, to you is that people of your and my generation, missed, I would say, the 25-year journey of compounding. Some of your schemes have probably been around for 25 years, given over 20% compounded interest, kind of wealth creation. But most people of our generation, never started at that period, nor did we stick for those 25 years. So my first question is, if you are addressing today a 25-year-old and you were to tell them why it makes a lot of sense to start now and stay till they are 50. I mean, we may be around to see them becoming very wealthy, or we may not, but what would your advice be to them?
See, in every generation, there are few people who become wealthy, right? And I have been seeing over the years, the job that I do, I see a lot of wealthy people,
Mm.
right, all around me. I don't think they are exceptionally brilliant people, right? I feel that they are people who have used common, and there are a lot of them are self-made people, right? We have seen since 90s, the atmosphere in India has been such that people who have people who have grown with us, a lot of some of them have created a lot of wealth. And when you see, when I have been always seeing, it has always interested me that why some people have made a lot of wealth.
Mm.
And I always feel that some people have made a lot of wealth because they are not bestowed with extreme amount of IQ. They have got very EQ and they have used common sense very well. I think when I see so people using common sense very well is what has made them rich. In investing also, I think one trend that I have seen amongst people who have made huge money in investment is their ability to invest contra, right? The ability to not go with the flow. So when I was talking to a college recently, MBA college, I was talking to them, and I said, what will decide the amount of wealth that you have is basically in your lifespan. The next 35 years you guys are going to work. In those 35 years, there will be 7 booms and 7 busts, right? There will be big 7 booms and there will be big 7 busts. It is how you behave when the markets are at an extreme is what will decide your wealth. Are you a person who is ready to? We had even every 5 years we have had this opportunity. Just since we have been talking to each other, also, if you see, even in COVID times,
Mm.
only 2 years, 3 years back, there was an opportunity. Today, 3 years return of my funds look some amazingly high. Why? Because 3 years back we had COVID. The entire India was supposed to be getting over. The markets were corrected that way.
Mm.
From around 58, 60,000, the market went below 28,000. I want any listener of ours to understand how many of them invested when the market went below 30,000.
Mm.
Right? When there was just because COVID happened, is India going to get finished? Is there no future for India because COVID happened? Our business is not going to make money because COVID happened. So this extreme reactions of the market will be always there. And how a human being behaves in those extreme environment is going to decide their wealth. So it has happened in every generation. Nothing new about the coming generation. It has happened in our generation also. It happened 100 years back also. And in investing, it's very clear that if we remove the herd mentality and you start investing after your friend has made money, right?
Mm.
Because when your friend has made money, already the markets have become expensive, right? That is why, because he has made money because markets have become expensive. After that, you try to jump into the market, you will always buy into an expensive market. So I think I am and I'm very, very positive of people who are 25 because I was very lucky. I started my career when liberalization had come. I think every generation, I got much more opportunities 25 years back, 30 years back. when I started my career, I started my career in 93. I got much more opportunities than what my father got.
Hmm.
And I seen my son, who's 25 years old today, has got much more opportunities than what I had 20, 30 years back. That's what my view is. Because India is only compounding, and compounding effect happens every 20 years. Of course, the environment will be better. And if you follow the simple rule of asset allocation, and in a country like India, 6 to 7% growth, even if we are not bullish, people will have 6% growth, 5% inflation. So somewhere 11 to 12% is the nominal growth of this country. So 11% nominal growth of this country. If you are a person who uses common sense, right? Why will you invest anywhere else except equity? Because which asset class will capture the nominal growth of the country, right? It is equities which will capture at the nominal growth of the country, right? Because when the country grows, the corporates will grow. If the corporates grow, their earning per share will grow, and if the earning per share will grow, their stock price will grow. If the stock price will grow, then you can make money out of investing in equity. So for any salaried employee like me, if I depend on my salary to get rich, I will never become wealthy. Right? If I want to become wealthy and I depend on my salary, because salary will only match inflation. Right? It's only if I invest wisely, then I am able to get the growth of the. So for salaried people, it is more important that they invest in some business. At least the businessman is invested in his own business. In a country which has just crossed $2,000 per capita, right? The opportunities are so immense in this country. As we go ahead, as we move from $2,000 per capita to $5,000 per capita, the kind of opportunities that will emerge in this country, right? We have seen it happening in every other country. We have seen recently it has happened in China also in the last 30 years. There is no stopping India now to get into that phase where we will be growing at a nice. And I'm saying I'm not asking for uh, something revolutionary also. I'm saying the same 6-7% growth with 4% of inflation will give me 11% nominal as a country. And to capitalize on that, I need to be in equities. That I am absolutely clear. And equities is the asset class where you pay taxation also less. If you earn more salary, you will pay more tax,
Hmm.
right? You will pay tax at the rate of 35%, 30%, 25%. But here, your taxation on capital gains is also only 10%, long-term capital gain. So long-term investing in equity, in my mind, is the only way to create wealth.
You made the point about the market, people developing a herd mentality when markets become expensive. And it's a great point because, again, we are in the last few days in the middle of that, hitting all-time highs, 64,000 crossed, 19,000 on the Nifty crossed. The tendency will be that, oh, let me go and put lump sum now at this point of time. What would be your advice to people who say have already been doing their SIP or have not invested but now suddenly see the Sensex at all-time high, and as you gave that example of seeing their friend doing something, what would your advice be? Should you put lump sum at these levels or stick to an SIP even though the markets are high?
So there are two puts. There are two. We have been chatting about this since last 10 years. And last 10 years, every discussion of ours, the same, what I'm going to talk now, I've talked consistently over the last 10 years. I feel that if the retail, it depends on how much volatility you can take. I've given in the earlier part, I said that India is growing at 11%. So if you want to grow in double digits, your wealth, the only place to grow is in equity. If you see last 10 years, it has always followed that, right? EPS growth and the market growth over a long period will always be similar, right? So that is given. So I believe that the way how I look at India right now, though you said the markets are very highly valued, right? Right, we are at the highest point on the market as we are talking. But the PE ratios, if you see, right, the PE ratios are just above average. It's not that market is in a euphoric stage. If the average if the PE ratios, historic PE ratios were around 18, right now we are at 21, 22. So I am not saying that there is a huge overvaluation. Are the markets expensive? Yes, the markets are expensive. They're not. We are not talking about cheap markets. Right? We are talking about relatively slightly expensive markets. But also look at in the light of the earning per share where India is placed today. Every macro of how can you be bearish on India right now, right? I am talking from a fund house which has always been very given very cautious calls. But how do I give cautious call when all our macros are at the right place? Inflation, we have not done any excesses during COVID. Our inflation is in control. Our trade deficit is in control. Our current account surpluses, we are 0.2% is only our deficit, right? On the current account. We have seen when current account is in a proper place, when the balance of payment is proper, every macro of India is in place. So there is no macro in India that you can point out that this macro indicator, macroeconomics wise, we are very well placed. So macroeconomic wise, we are very placed. Banking sector is very healthy, right? Name there is not a single bank where you will tell me that it has got an NPA problem. So banking balance sheets are very strong. Corporate balance sheets are very strong. Corporates are majorly, there is hardly any leverage in the corporate. So as the demand grows, corporates are in a good position to leverage their balance sheet and grow, create more capacities, right? You are seeing that capacity utilizations of the corporates are going up, right? So as corporate capacity utilization gets to the full extent, they will grow their capacities. When they grow their capacities, they need not take more equity, they can take more debt. So that's good for the banking sector. That good for the many. And another thing that has happened is understand what has happened overall. That with the geopolitics as it is, without going into much detail, everybody wants another option to China, right? Every manufacturer in the world wants another option to China. Government has tried to promote manufacturing a big time, but more needs to be done on the manufacturing side. We are not a manufacturing culture per se as a country. So I'm not saying a revolution is happening in the India. Even if I don't say that a revolution is happening on the manufacturing side, but all our clients, every corporate that we speak to, is getting more and more inquiries. So China plus one is actually happening at the ground level by more inquiries. So a garment exporter, is he exporting more this year than what he was exporting last year? Yes, he's doing. April, May, June of this year have been better than April, May, June of last year. He's getting more and more inquiries. So sector after sector, when you go into, they were at the bottom, right? Last whether you look at banking sector, whether you look at auto sector, whether you look at auto ancillary, whether you look at chemical, everybody around the world wants an alternative supply chain to China. So manufacturing in India is growing well. So because of what is happening at the ground level, I believe that manufacturing, mining in India, all those sectors are expected to do well. And banking is in a beautiful space. So sector after sector, there are opportunities. So the market looks slightly expensive, but still it's a great opportunity. Whether you get into straight equity or you come into my favorite category, the balance advantage fund. That's what I was saying. Last 10 years, I've been talking only about that. So if you're a person, I can't give one advice to all because it depends on how much you are into equities already and how much volatility you can take. A person like me is always 90% into equities because I don't get scared with volatility. I get very happy when markets become volatile because volatility for me is to invest more, right? Because I believe in the long-term story, right? That over a period of time, if I invest in equities, I'll do much better than any other asset class. That is a firm belief I have. So whenever there is a volatility, I am quite okay with volatility. Volatility is an opportunity. Volatility, if in my mind, is not a risk. In a country like India, where we are growing at 11% per annum, I don't think volatility is a risk. Volatility is an opportunity. So if you've got the mindset like me that volatility is an opportunity, you can always come into equities and then wait it out. Even if there is volatility in between, you don't care because you are making money over the long term. But if you're a person who can't take volatility or gets worried on volatility, what we had done for this whole segment of people who are worried about volatility, we had said that normally people come into equities when the markets are at all-time high. Then they don't have that good experience. And then when the markets go down, they actually get worried and they redeem also. So for all those, that is the way of wealth, destroying wealth, not making money. So we said people are pro-cyclical in this country. I can't change the psychology of people. So I'll create products which are contra-cyclical, right? Because in equities, if you have to make money, you have to behave contra. So what we had done 10 years back, we came up with a product called ICICI Prudential Balance Advantage Fund. What does it do in simple terms? In periods like this, it will invest less in equity. it will decrease its allocation to equity. And when the markets correct, it will again increase its allocation to equities. So I believe that for retail guys who cannot take volatility, because suddenly there is a huge flow in the last 4 months, there is a huge inflow of foreign money into the country. Markets have corrected. So if they can't take volatility and they want to be careful in the current market scenario, they can always, at any point of time, they can come up with products which are, we call it dynamic asset allocation. That we move from equity to debt, from debt to equity, depending on the level of the market. Markets high, you reduce your equity. Markets low, you increase equity. It's automatic. Every day, my people buy or sell in those funds. So people who are worried about volatility can come in any of our funds, balance advantage fund, balance fund, or multi-asset fund. In every place, we are managing the money dynamic asset. So we manage around more than 3 lakh crores of equity. Out of that, 1 lakh crore is now dynamic asset allocation. And it has given a beautiful experience to the customer. If I tell you just in one line, it has only invested less than 50% into the equity markets over the last 10 years. And it has almost given 90% of the equity returns. What the Nifty would have given, it has given 90% of that return by invest. So you get 90% of the market by investing only 50% in the market. That's what it has done over the last 10 years.
Nimesh, you've been constantly innovating, and I know that that's one of your hallmarks as a professional. You talked about 10 years ago doing balanced advantage funds, dynamic asset allocation. Now, of course, the industry is followed as well. You have something called a Freedom SIP, a Booster STP. Can you explain to viewers what these innovations are?
Freedom SIP is a very interesting one. I'll talk about that Freedom SIP because it has given me a lot of positive leverage at home also. My wife believes that I'm a good investor, right? Finally, after 30 years, I've not been able to convince her. But when I did Freedom SIP, see, I'm a salaried employee, I'm in my 50s, right? So when I'm used to a salary check coming on every tomorrow morning, I'll get a salary credit in my account. I'm used to a fixed sum coming into my account every month, right? After 5 years, I won't have that amount coming into my account. So what do I do? Right? So what the solution for people like this is that if you want a monthly inflow, right? Invest for the next 10 years, right? Keep on investing for the next 8 years, 10 years. So for 10 years, you give me the money. After that, after 10 years, every month you do a systematic withdrawal plan also. So Freedom SIP is nothing new. It's not a new product per se, but it's a new feature which the customer wants. So people like me are earning today. So when you are earning, you keep on putting money every month. So it is an SIP every month, Freedom SIP. So it will give you freedom after 10 years. So after 10 years, there are a lot of workings on that where you can get a certain percentage, a certain multiple of what you invest today. So suppose you are 43, invest for the next 15 years, right? For 15 years, you keep on giving money. You have a target amount that every year I will need so much for my monthly expenditure. So every month, so it is a mix of systematic investment plan for 15 years and then systematic withdrawal plan, which can continue your whole life. Right? Every month you get that amount.
It's very interesting that you talked about
It's
it.
a mix of, and I think the customers have loved it because then you know your target,
and
right?
also,
That today is
Nimesh,
my
I
cost of
think,
living is.
while SIP has now become a household name thanks to what your industry and the association and SEBI have done. But I think SWP is something which has been largely not as much spoken as a feature. And today you have the Pension Regulatory Authority using the word SWP and saying we'll allow people to withdraw money in that route rather than going and buying an annuity which will give you a 5 or 6% kind of a return on all that you've accumulated over your working life. And I think it's amazing that you've called it Freedom SIP instead of saying SWP. That's your way of. But I think it's remarkable that we need to talk more about SWP, I feel.
Yeah. So it's a mix of, lesser the packaging, the better. So there is transparency for the customer. So when customer is taking Freedom SIP, he's taking a SIP and a SWP, simple. Then he's systematically transfer market. Booster STP, we realized that a lot of people are coming now with systematic transfer plan. If they want to invest today one time, instead of that, they will invest over the next 12 months. That's what they do. They like to invest instead of investing now. You don't know, so over the next 10 months, you'll keep on investing. If markets are so instead of taking a constant amount every month, I will say markets are high, I'll take lower amount. Next month, if the market is corrected, I'll take a higher amount. So that's what we say, that is the booster STP. That when the markets are low, we'll take more amount, and when the markets are high, we'll take a lesser amount. So it's not next 10 months I take the same constant amount. That will not happen. It will happen based on the market levels.
Hmm.
So that is quite popular amongst the high net worth individuals, taking those booster STPs.
Hmm.
So you don't want to time the market, you divide it into 10 parts and just leave it.
Nimesh, how important is it to top up one's SIPs as well? If one sees the average ticket size, one gets the sense that while more and more people are starting SIPs, they're probably not increasing them with an increase in their salary or in their income over a period of time. Is that a something that you see? You manage more than 5 lakh crore of assets. Is that something which is important, that you need to keep topping it up as and when you can afford to top it?
From an individual point of view, it's always very good that you have a goal. For every investment that you do with ICICI Prudential or with any other AMC also, you should always have a goal for that SIP. Why I am doing this SIP? Why I'm investing? Am I investing for my son's education, for my daughter's education? So for different goals of life, you should have different SIPs, right? That is the first point. Now, if your goal value changes, right, you need to change your SIP also regularly. There are two reasons why SIP should change. The quantum of your SIP. You might have been thinking about your son's education or your daughter's education in India. Suddenly you think of your daughter's education abroad, right? So then the same amount that you had put in for your goal will not work. You'll have to put more. That is one angle to it. So your goal can change, and based on goal changing, you will have to increase your SIP. But another thing is that people open. I started an SIP 4 years back. It's a perpetual SIP, right? But today my salary is at least 50% more than what it was 4 years back. Should I not keep on increasing the SIP regularly? So that's where this SIP comes into play, right? So that it keeps on increase, step up SIP as we call it. Every year, more or less in India, based on inflation, the salary growth also happens. So please keep on, when you open an SIP itself, you tell the AMC that please keep on increasing my SIP by 10% every year.
Hmm.
So if it is a 5,000 rupees SIP, it will become 5,500 next year, 6,050 the year after that. So it will keep on growing at 10% per annum. So take a feature like that. It is very, very important.
Nimesh, one of the reluctance that I find, and we can have a separate conversation on this later again next time, but among young people are the following. One, partly you've explained the volatility piece. And, a good starting point could be a balanced or a dynamic kind of a fund. The other is that a lot of young people I speak to feel that, uh, I don't have that much money. So I only have 1,000 rupees or 2,000 to spare. And you are telling me goals which are 4 crore, 5 crore, and I can't put in 20, 30,000 a month at this stage. What would you tell them? And again, as a company which keeps innovating, what is next? What's coming up next to bring in these young people? I wish we had more planners. Unfortunately, as a country, we don't have even remotely a kind of a number of individuals who can actually give individual advice to people.
But Vivek, what people like you are doing has been so important that the message is spreading across, right? While we don't have individual planners, but with the digital invasion, right? And people of like you reaching everybody digitally, we are seeing a much smarter generation today than what we were 30 years back, right? I will say when I was 30 years back, hardly people invested in the markets. There were very few people who would invest in the markets. But even from the time that I joined this company 16 years back till date, if I see the behavior of the young investor is very, very different. When I joined this company, the average age of a guy of my customer was 40. Today, the average age of my customer is in their 20s, right? So the young people are coming in. I meet lots and lots and lots of people who start putting SIPs right from the time they start earning, right? Maybe they are putting a lesser amount, but they also understand this concept of step up. So I think while we do not have as many individual advisors that we need, but the digital and the what work people like you have done has spread the message across. And I think that today's young man is much better informed than what we were 30 years back, or even when I started this profession 16 years back. I think the young guys, I'm quite impressed with them, their knowledge. They're going online and checking everything. They don't depend on one person. They go and check information from two, three different sources. So they are skeptical. And that's a very positive sign that they are skeptical. Some of them have lost money in the coins business also. So that has also made them more skeptical. It's good. It's good that
They burned their fingers
so
early. Yeah.
while the because you lose less amount of money at that point of time. A lot of people have come into direct equities, right? So they are smiling year to year right now, right? But we have seen how every boom, what is happening in mid cap, I'm seeing every day. The way mid cap stocks are going up, the way small caps are still going up, the companies which we had hardly heard the names of suddenly going up big time. So it's all happening again. So I get very happy. I am quite impressed with the younger generation. People who are younger than me are way smarter than what I was. I see them coming into equities quite early. Um, and I think the number of demat accounts that are opened in the country, they'll very soon realize that direct equity is not making as much money to them as it was making earlier. I see a lot of them getting converted into mutual funds. So mutual funds are very stable vehicles. We diversify. What happens in direct equity? They take exposure on three, four stocks, and then they have a bad experience because they don't have enough research on that. So mutual funds would do research on that, and they diversify among 40 stocks. So naturally, your risk is less, right? Your probability of going wrong is that much lesser, and they've understood that. And I again thank people like you who have done a brilliant job of advising the giving the right advice.
Always a pleasure talking to you, Nimesh. Thank you very much. Look forward to many more such conversations, and I wish you
Definitely.
a glorious next 25 years as well. Keep making
Thank you.
wealth for India's citizens. Thank you very much for joining me.
Thank you. Thank you.